I've got three things that need to happen over at Uber before I'd even think about taking a ride with this company. What is going on, investors? Hopefully, you guys are doing well out there. It is time to talk about Uber Technologies, ticker symbol UBER. Year to date, this stock has been slammed down 36%. Over the last year, this thing's down about 47%. And today, the stock made new 52-week lows down to $25.90 per share. After rallying late in the day, the stock recovered some of those gains, but still was down over 4.5%, down to close to $28 per share. This is on the heels of announcing Q1 earnings, which really missed expectations by investors. We'll talk about some of the things that happened in the most recent quarter. We'll go through the financials. We'll take a look at the revenues, the profits over at Uber, and then we got to look at this from a technical perspective. This hasn't changed a whole lot since the last time we looked at Uber about 3 months ago, and if you listen to my advice then, from a technical perspective, it's played out exactly how we thought it was, and we'll see if there's anything likely to change that going forward over at Uber. Now, I've got three things that I'm going to talk about on today's show that have to happen over at Uber before you'd even think about taking an investment stake in this company. Now, let's talk about this Q1. Revenue came in at $6.9 billion. That was 138% year-over-year revenue growth, and they also beat expectations by $800 million. So just off the top of your head, when you have 138% year-over-year revenue growth, you beat expectations by really nearly $1 billion on that revenue growth, and your stock slid to 52-week lows. Clearly, this stock's revenue growth is not that important to investors. In fact, investors probably have strong revenue growth year over year heading into really the back half of this year, essentially priced into the stock. Remember, back in 2021, you still had some shutdowns. You still had some things impacting Uber's business. Going back to work, being back in the office still wasn't a thing over at Uber quite yet back last year, and now a lot of those things are in place. And so obviously the revenue expectations over at Uber have accelerated, and despite beating that by $800 million, the stock still crashed today. So that's the first thing to realize. One of the first things to realize with Uber is the company is not being based on the valuation of the company. The price performance of the shares clearly doesn't care about revenue growth. The other thing that we have to factor in, they've got a $60 billion valuation, or I've seen on other sites, it's probably closer to about 55 now, but you still have a massive valuation on this stock. And the first thing that I actually think Uber needs to do correctly before you even think about investing in this company is actually make acquisitions and be able to tie them in and roll them into the company. This company, as we've seen over the last year, has not done a good job of that. And the reason why we know this is on the most recent earnings call, they noted that their Uber, Grab, Aurora, and Didi stakes had to be written down in the most recent quarter. When we come over to the financials, we'll see over $6 billion. Yeah, over $6 billion, which nearly equaled the amount of revenue that this company did. They had to write down their equity investments in those stakes over the last quarter, essentially mean they overpaid for these. They haven't performed well. They haven't tied into the company well. And that is not a strategy that's going to work out very well for Uber, because when we stretch out Uber's view, maybe another year or two down the line, investors are really expecting kind of mid-teens growth on that top line revenues over at Uber. In fact, we're not going to see over $10 billion worth of revenue over at Uber for maybe another 2 years. This is according to analyst estimates. These obviously can change a lot based on the economy, based on Uber's demand, based on the virus as well. But this company's revenue growth, which looks impressive right now at over 130%, is going to back up against much tougher comps. And so we're going to stretch out to kind of like a mid-teens grower over at Uber. The way you keep that growth accelerating is by acquiring companies. You have a strong network and a large network of drivers that you have relationships with. Getting them to deliver other things certainly sounds like a great plan. But as of right now, Uber has not been able to integrate other acquisitions, other ride-hailing companies, other business models into their fleet of business. And it certainly is one thing, probably the number one thing, I would wait and to see if Uber's able to accomplish that. That could make this a better investment in the future. Now, in terms of the financials, we see here they had $26.5 billion worth of gross bookings. Again, this company acts a lot like an eBay, a lot like an Airbnb, a lot like these platform companies that collect a large amount of revenue, but then only take a portion of that, obviously, kind of in commission and fees. So they recognized about $26.5 billion worth of gross bookings. They are able to recognize revenue attributable to Uber down here at about $6.9 billion. What I noticed is for so long when we looked at these companies, the mobility, which is your traditional Uber ride, that business obviously was under a lot of pressure. We're seeing that reaccelerate, and we're starting to see delivery, which is kind of your food delivery. We're starting to see that decline a little bit in terms of its growth rate. Now, on the revenue side, they're still seeing an acceleration of revenue on both those sides, but I'm wondering at the delivery side, is there a ceiling to the amount they can charge before you get some pushback from restaurants, before you get pushback from consumers on the prices of those types of things? We'll see if something like that materializes in the future. Now, speaking of the future, the upcoming quarter, Uber gave us guidance between 28.5 up to 29.5 billion on that gross booking side. Again, in the most recent quarter, they were at 26.5, expected to go up another $2 to $3 billion quarter over quarter on that booking side. But on the profit side, they didn't really give us a lot of clarity. And then when we come over here to the statement of financials, we see we have the $6.8 billion worth of revenue. We see that this is not necessarily a very high margin business, because off of that $6.8 billion in revenue, we had to spend $4 billion in cost, okay, to the drivers and to all those different things, performing acts and services. And so they obviously have to compensate those people with money, and that obviously impacts your gross margins. And we see here, this company doesn't have a lot to play with after you take 6.8 and then you minus off 4 billion. Keep in mind, this company still has to do sales and marketing. One thing that really stands out to me is last year we spent $1.1 billion on marketing to get 2.9 billion. This year we spent 1.2. So in some ways that's a positive. We only had to spend $100 million more to get over $3 billion more to the revenue side. But one thing has me thinking, like, what were you doing last year when you had to spend 1.1 billion to get 2.3? Couldn't you have cut back on your marketing spend? Uber's marketing spend is essentially flat, so in some ways that can be viewed as a positive going forward. The fact that they didn't have to spend a ton more on marketing to basically more than double their revenues. That is a positive from what I see here. All the other costs essentially in line. We see here our total costs and expenses up from 4.4 up to 7.3. Again, vastly driven by the fact that you had to pay these drivers. The more bookings, the more deliveries you have over at Uber, well, the more you got to pay drivers and those types of things. So that impacted our profitability still over at Uber, just still not printing profits. You have this loss from operations. So you take this 6.8, you minus off 7.3, and you guessed it, we lost money at 482. Now, last year we spent 2.9, we minus off 4.4, we lost 1.5. So we've improved on this loss from operations from a $1.5 billion loss last year on a quarterly basis and improved that to almost break even to about $482 million on losses this year. But that's the number two thing that I need to see out of Uber before I'd even think about investing in this company is we need to start printing consecutive and reliable profits. Now, I understand 2020 and into 2021 was a very difficult environment, but all things being considered going forward, if those things start to level out, and obviously you have the delivery business, which is still performing very well for over at Uber, you get the tailwind of back to work and travel coming back for Uber, you've got to start printing profits over this company because you've got over a $50 billion, a $50 billion valuation on a company that is not making money, that's doing just $6 billion worth of revenue, that is expected to slow to kind of a mid-teens growth in the coming years ahead. That's probably if things go really well on the virus side. Well, that's a problem, and I really wouldn't be interested in this company until we start printing profits on this side. Now, the net income looks even worse because, again, we recognize this $6.1 billion worth of equity investment losses on the Uber Grab, the Aurora, and Didi stakes. Again, that's my number one thing that Uber has to do. They've got to be able to integrate these acquisitions and not time them incorrectly, not make bad investments, not overpay like they have done over the last few years. They had to recognize over a $6 billion loss, and so that turned our net loss to a big, gigantic $5.9 billion in the quarter last year, a little closer to break even from that profit side. From a cash flow perspective, over at Uber, you get to pull down that disastrous $5.9 billion worth of net loss. You get to add that back in because we're just looking at cash generated by operating Uber's core business, okay? And this will give you an even better sense of where we are in terms of that profitability scale. You get to add stuff back in, like the mistake of making acquisitions at too high of a price. You get to add back in stock-based compensation, which went from $281 million all the way up to $360 million. Again, despite losses, despite making over $5 billion worth of bad acquisitions and bad roll-ups and bad tie-ups. Well, this company is basically break even from a cash flow perspective. So if you want to analyze Uber from an operating profit perspective, I wouldn't mind doing that. Net income, I think we can ignore a little bit, although this $6 billion impairment charge really shows kind of mismanagement of the company's assets. We could analyze this from an operating perspective. It's almost break even. From a cash flow perspective, you are just mildly profitable. I'd want to see 3 or 4 consecutive quarters, quite frankly, of that before I got super excited about Uber stock. Everything else from a cash flow perspective about what you'd expect with this company. The company on the balance sheet has some cash. It's about where we were at the beginning of the year. They've got about $9 billion worth of debt as well. The company can't have too many more bad years before a lot of dilutive actions or maybe even a larger amount of bank debt appears on Uber's balance sheet. So things have really got to go well. And I think some of that is being priced into the stock because we have seen really since May of 2021, this stock has been in a massive decline. And when you see this type of downward channel in a stock, it is an absolute no touch in my opinion. We talked about this on the last earnings call that this company had back in February. We talked about how you had to get out of this channel over at Uber, which means putting green candles over and above this purple line and taking out the previous highs. You had to see that. That is not what happened. The stock continues to go lower. The same thing applies today. In fact, that's my number 3rd thing that has to happen at Uber before I'd even think about investing in this company is we've got to put up green candles up and over this downward channel. Otherwise, you have to assume that this downward channel is intact. In fact, we've broken through the bottom end of it, which means now this lower green trend line is now acting. It was support. Now it's resistance. I've seen stocks make the technical pattern where they start another downward channel and it gets even worse. We'll see if that materializes with Uber, but I would not touch Uber stock until they prove they can roll up other companies into their business model based on their valuation, their ability to tap equity, their ability to leverage the drivers that they already have relationships is an important part of Uber's business model. Because think about it, robo-taxis could be right around the corner. It could be Tesla that solves that. It could be Apple. It could be a number of different companies. If Uber doesn't get its act together, well, AI and robotics will probably kick this company to the curb at some point, or at least kick their valuation to the curb at some point. They need to be able to roll up this company and get it bigger and leverage the relationships they already have over at the company. The second thing they need to do, start printing consecutive profits quarter after quarter of either positive operating profits or positive cash flows. Right now, we're essentially at a break-even point, although Uber has been here before and we thought they've turned the corner, but they have not. And then finally, the last thing that needs to happen over at Uber is we need to break out of this technical downtrend that we're in. I would not buy this stock until you've put green candles up over this purple trend line, which will just continue to work its way down. Like I said, we've actually broken down below this actual green trend line. So now you not only need to get back up past through the lower end of the channel, but now you need to get through the upper end of the channel. I would not expect that to happen anytime soon with Uber. If you're in this one, I personally would just simply take profits or take your losses as this moves back to the top of the channel, because from a valuation perspective and an executional standpoint, this company still is not delivering the goods. Hopefully you guys enjoyed today's video. That was about Uber. Have a great day and good luck with your investments.